In this presentation, we will take a look at multiple choice questions related to responsibility accounting, going through the questions and then practicing test taking skills with them. First question, the best allocation basis for the departmental costs of an advertising campaign may be A, proportion of floor space of each department, B, relative number of items each department had on sale, C, number of customers to enter each department, D, proportional number of employees in each department, or E, proportion of sales of each department. Let's go through this again using the process of elimination. The best allocation basis for the departmental costs of an advertising campaign may be. Okay, so key terms here, we've got the allocation basis. What are we then going to use in order to allocate the costs of an advertising campaign? So we have to assume then that this advertising campaign happened. It's going to need to be applied to multiple departments that are benefiting from it. So how are we going to do that? How are we going to apply this out? Now, again, when you think about this, you might say, well, why don't we just take the departments and divide it by the number of departments? But the departments might be different sizes. Therefore, we use an activity base. Okay, so A says the proportion of floor space of each department. And that's that's a very common type of activity base. So it sounds kind of like reasonable. So, I mean, we might use that. B says the relative number of items each department had on sale. And again, maybe if we're trying to allocate advertising, maybe, it would be applicable to allocate it based on the number of things that we're selling in each department. C says number of customers to enter each department. And again, that sounds kind of reasonable, right? I mean, the number of customers, maybe if we know what that is, we can say, use that as a ratio. D says the proportional number of employees in each department. And again, very common kind of method that we would use. And E says the proportion of sales of each department. And again, that's a very common thing to use. So now all of these are we could use basically any one of these types of items. So really our question is which would be best with regard to the advertising campaign to allocate advertising. So of these allocations of advertising, I would think the first one, the floor space, maybe larger floor space would be applicable. We could use that, but it doesn't seem directly related to the advertising campaign, which is there to generate revenue. So I would think that we could use floor space, but probably not the best. Number of items each department had, number of customers to enter each department, proportional number of employees in each department, or proportional sales. I would think that the proportional number of employees may not be the best way to allocate the advertising. That might be a good way to allocate some other type of expense, but possibly not the advertising. Relative number of items each department had on sale. Now, that would kind of assume that we're using equal advertising for, basically per item that is on sale. And that probably might not be the case. So I would think that's probably not true. The number of customers to enter the store or the proportion of sales. Now, of those two, you would think that the ultimate goal is sales, of course, with advertising. So we'll probably want to tie the advertising not just to the customers that go into the store, although we would think that that might go up too, but to the ultimate goal, which would probably be sales. So sales is probably a good proportion that we would use. We can use the ratio of sales to apply out the advertising campaign to the relevant departments. So final answer, the best allocation basis for the departmental costs of an advertising campaign may be E, proportion of sales of each department. Next question. Costs that the manager has the power to significantly affect, either A, uncontrollable costs, B, direct costs, D or C, joint costs, D, controllable costs, or E, indirect costs. Let's go through this again using the process of elimination. Costs that the manager has the power to significantly affect. Either A, uncontrollable costs. Well, if they're uncontrollable, then the manager maybe doesn't have much control over it. So I would think that's not it. And then B says the direct costs. And that sounds kind of like it should be, but if it's direct costs. C says joint costs. And if it's joint, then what does it join to? It seems like that's going to lessen the control. So I'm going to say no. And then D says the controllable costs. Now, this is obviously the opposite of the uncontrollable, and that sounds more reasonable than uncontrollable. And E says the indirect costs, which is the opposite of direct costs, and that sounds less control over those, you would think. So we'll keep it with B and D. Let's go through it again. Costs that the manager has the power to significantly affect either B, direct costs, or D, controllable costs. Now, of those two, we're talking about the ability of management to affect them, and therefore controllable would be the correct term we're looking for. Again, the controllable costs are probably also direct costs, the costs that are going to be directly applied to, we can easily apply to a specific department. However, we're considering here those costs that are controllable because we're thinking about, measuring the performance of management. Final answer, costs that the manager has the power to significantly affect, D, controllable costs.